Hello and good morning to everyone today. So today we are having a webinar on tools of the different tools of the Quantsapp application. Today we will be looking at the tools and most importantly we will see how we can utilize them and can learn more about the options and utilities of these tools in the option trading. Uh, so we had budget last week, and I hope we all have had a very good trading session for it. And the as the rally come last week, the rally that was in the Nifty and Bank Nifty was superb. Almost 9% in Nifty and around 15 to 16% in Bank Nifty. Like a wonderful move that we have seen last week, along with the longs that has built up. I hope we all have enjoyed the last week. The volatility was on the other level. So now we're gonna see some of the tools. We're gonna see what we can use them in a more effective way. We're gonna see. So it's more into the tools, but along with we're gonna see how we can use the options concept and in those tools. So we'll begin our session. So today we are taking the architect, open interest and triggers. So first we'll start with the architect. We'll see so the basic motive of taking the architect and making the architect in the for the by the Quantsapp. So we have lots and lots of strategies, option strategies. We come across I would say 50s, 60s of strategies, but we don't know how to use them. We don't know what are the uses of it, how we can draw the payoff, and more importantly, looking at the different factors. Even suppose we are making any particular strategy, maybe it's a long or short, but looking at it that whether it's at different scenarios. So if I say that if we are making a long strategy and I want to see how the IV will impact, how the I would say days to maturity, as we are getting close to the maturity, how it's going to impact the strategy. So there's lots and lots of factors which are present in the options. We're gonna see different factor, or we're gonna see two factors, that IV, and we're gonna see talk about the days to maturity, theta, how a theta will impact. We're gonna see about the Greeks. We will see what like how the Greeks can actually affect the strategies. So it's all together looking into and making your own strategy. Now this is something which are the predefined. So there might be possibility we have learned in the books or from other sources. But what if you want to make a particular strategy? You want to have your own strategy. You want to see the break even point. You want to see the graph. So payoff graph is something we all are interested in. To be honest, we all want to know कि बॉस प्रॉफिट कितना होगा, लॉस कितना होगा, किस लेवल पे होगा, किस लेवल पे नहीं होगा. So these are the point we all are confused when we are making our own strategy. So this is where the concept option architect tools comes in, giving you the perfect idea and believe, okay, if I'm taking this leg along with this leg, if I'm including futures, if I'm including combinations of options in future, then what could be my possible result? This is what we all can do in the option architect. So we'll begin our today's session. So this is option architect. So this is the new UI which we have recently launched, and this is more compatible with the what we have as per the Android and iOS. So here you can see all the tools, search, filter, and home button. And the new functionalities, you can see the back button, which is more important because we switch from one tool to another tool while looking at the analyzing the options. So this is something which requires a lot of time. So we are jumping towards the architect. So this is the architect. So what we are doing in the architect, so for the example purpose, I will take the Nifty. So now here you can see the fair price. So as we all know, so 1 second before taking that ahead, I want to highlight this, that expiry we are taking is of the month of February. And so now we have the for the index, bank Nifty, we have the weekly expiry and the monthly expiry as well. So you can see all the expiries in the lined up. So now suppose if I'm taking the weekly expiry, I'm getting the fair prices here. But if I'm taking the if I'm taking the expiry of monthly expiry. So if I say monthly expiry, then I'm getting the future web prices. So now what this concept fair price, future price, why we have taken this? So there's a simple logic behind it. So we all know that for any future contract, the expiry comes in the end, in the last Thursday of the month. So that's the last expiry of that particular month for that particular series. I would rather set that particular series. So if I say for the February series, the expiry will be on the 25th of the March, 25th of the February, sorry. And if I say for the March, then the expiry that the last Thursday is coming on the 25th March. So that's the end of the March series expiry. Now, the problem comes that when we select the this weekly expiry. So now there's no future contract for the weekly expiry. So to take the point and to replicate the futures, we do calculate the fair prices. So now what is fair price? So fair price is a concept where so it's calculated by the taking the your at the money strike. So now so suppose Nifty is trading at 14,900. Suppose, I don't know. So if I will take the at the money strike, I will add the call option premium and deduct the put option premium. So it's giving me the fair price, roughly a fair price, which I can take in place of the futures for the weekly expiry. So this is why, so you will see this fair price. And if you see any, if you take any monthly expiry, so if suppose if you are taking any, like suppose SDFC, so if you take any stock wise symbol, then obviously you're gonna have the monthly expiry, you will be having the future price. But if you are taking index, if I say Nifty, bank Nifty, fin Nifty, but then for the weekly expiry, you will be having the concept of fair price, and when you will be taking the monthly expiry, you will be having the concept of future price. So this is why which one point you can also keep in mind looking into the fair price and the future price. Now moving ahead, so we were making a strategy. I don't know what I want to make, but I have a point in my mind that I have these two legs. I want to make a strategy. I have no clue how the payoff will be, what will the break even point, and what will be the option Greeks. I have no clue, but I want to make something. So what I will do, I'm here. So we have the let's take the 18th Feb. So we'll have a small amount of time. Now selecting your instrument. So suppose I'm taking the few options. Now you can see then at the time of select options, then expiry, selecting the strike price. So here the point is I'm taking any strike of 4,900. I get the premium as soon as I select the strike price. So the premium here is what you don't have to worry about. And then selecting call option or put option. So we'll try to make let's say a long straddle, a straddle will try to make. So straddle, we all know, buying call and put of the same strike price. So we're gonna see that, and then selecting my quantity, then selecting whether I'm buying it or selling it. So say if I'm making a long, then I wanna buy. I'm adding first leg. So this is my first leg. So this is how I start making my own strategy. Now, before taking the what are the values over here, what are the Greeks, I'll just will make a whole strategy first. So I'm gonna add one more leg. So Nifty options expiry we have to keep in mind. Same strike price. Now the option I'm changing, buying it. So now I have made a long strategy. And if you want to learn more strategies, for the predefined strategies, you can also go to the learn. Here you have these strategies. If you click here, you have the strategies for bullish, bearish, volatility, oscillate market. So for the different scenarios, we have the different we have given the free strategies where you can read and can implement. You can learn more about it. So we're gonna go back. Okay, Nifty 18th of Feb. Right. We also added one more leg for the 18th of Feb. Option type is put buy. So now what we are doing here, we are just making any strategy. So suppose we might think that what will happen if I buy both call and put of the same strike price. So we also keep having the point कि okay boss अगर market ऊपर जा रहा है तो call if it will benefit that if market is going down then put will benefit. So what is the point of buying both these strategies? So option is not only about the movement that are coming in, but there are also lots of different factors. That factors are being defined by the Greeks. So if I say delta, if I say delta tells you that if the options are moving, if the underlying prices is moving with 1 point, then how much your option premium will change. So this is the only one part which we see as a option trader. Like most of we see that okay, boss, agar if the underlying is going to get up, the call is going to get benefited. If the underlying prices are falling, then the put is going to be benefited. But one should be considered apart from this one particular factor, there are lots and different factors. So there's a factor of so there's a second derivative, that's a gamma. Then you have the theta, volatility. So these are the some other factors which I would say largely impact the option premium. And that is why we are looking how those particular thing can actually going to impact. So if I take just first we'll take the call option. So this is my long call. Buying a call, when you're buying an option, that's a long call. So if I'm buying a long call, I want to see the payoff. So we all know when we are buying it, we have the limited risk as the only the amount of premium which I have paid, but the profit can be unlimited. But you think that really if the market is going to get the profit is going to be in a large amount. So the point of looking here, if I say this is my strategy, I can see the break even point is something around 15,150 nearby. If I zoom in, 15,145 somewhere. And I'll tell you the calculation as well, key how we have calculated. So layman words, we're gonna calculate the break even point. But suppose I don't know how to calculate the break even point, but I want to see what is the break even point. I can clearly see the break even point is the point where I will be making no profit or no loss. I am on the situation that either I will be if the underlying price won't go up from that or won't fall from that particular point, I will be in the position of no profit, no loss. So this is how I can see break even point for the expiry. Now I want to see that okay, underlying will go, suppose underlying comes to, so the underlying right now is 4900, 49,170 somewhere. If I say that underlying came to the level of 15,150, so underlying had roughly around 100 250 points movement, and we have 12 days to expiry. Have you ever tried looking into that? This is the point, this is somewhere, this is the point, this is the point 15 15, so okay, 15, once again 15,110. So this is the level. If I say, if I look at this level, so you can see the profit and loss in the white. That is telling me that, so this white line tells me the profit and loss in that particular day, and the orange line is telling me the profit and loss on the expiry day. So if I say this profit and loss on the day of on the particular day on which I'm making this strategy is 7,000. It's almost 7,800, 900. But if you see on the same day, same level, on the same level on the expiry day, the profit could go to 2000, negative 2,500. And why is this? So boss, I'm buying a call option. I'm buying a call option. I know if I buy a call option, if the underlying prices are going up, I will be benefited. That is true. That is true. But have you ever thought of the time value of money that option comes with, which is being explained by the theta? So theta is one more factor which tells me if underlying, suppose went to, where were we? Okay, to the level of 15,110. It's almost 100 point movement from the current price. So if the movement come, the underlying will going to get benefited if that comes. But if you sorry, the option is going to get benefited with the underlying movement. But if you see on the same time, if the movement come on the last till the end of it, you will losing the premium. So this is a point which comes very handy, looking at the different things, knowing what could be the payoff. And suppose, so this was my first leg, and I'm experimenting the new strategies here, and I want to see the payoffs, and want to see what could be my the break even point. So now let's add one more leg. I don't know, I'm just gonna randomly add one leg. So say I 15,100 put option, I'm selling it. I don't know, I'm just adding, this is my leg. So now you can see the payoff here. So I randomly added one more leg. So I shorted a put option of 15,100. So that's in the money put option I shorted, and I'm buying at the money call option. I don't know what could be my profit and loss, but I can see this something. This could be my profit and loss. I can see the break even point. It's at around to the level of 14,860 somewhere. I don't know what I did, but I can actually sense the profit and loss of the strategy that I'm gonna implement, or which I'm going to see. So this is a one part of the option architect, the powerfulness of this tool, which gives me a very insights of a lots of thing, looking into what could be the payoff on a particular day. So white dotted line is telling me the payoff on the particular day. The orange line is telling me the profit and loss on the expiry day. I can see the gap that is coming here. If I say, if the underlying stayed on this level only, so on the given day on which I'm making this strategy, I won't be having uh, what do you say, a major loss. But if you say, if you buy a call option, suppose for the 18th of Feb, you are buying a call option, you might be losing up almost 17, more than 17,000 if the underlying stayed to the same level. And that is why most of the people make a wrong judgment, because they forget to take the proper looking into why that looking into the gap that would be coming as we are approaching the expiry. So this is the one point you should be keeping in mind, looking into, okay, if you have a long, if you are taking any position in the option, then always look that theta, that the option Greek theta, that's also the time to maturity. It's going to let you bleed a lot. So even though underlying stayed at that level, but time value of money is losing, and that is the place where you will be losing a lot of premium. Now suppose, so this is a one particular point. So we have, okay, so this is strategy is for 18th of Feb. One second. So I'm gonna change it to 11th of Feb. Now we're gonna see a lot of things. Now you can say we have, suppose you are trading in the weekly option, the next weekly option. Now I want to see what could be the payoff. I'm just taking the normal single leg call option. So if you can see here on the top of, this is the scenario analysis, and this is the most interesting part of all of the things we have spoken and seen till now. So now if I say I have 5 days to expiry, बॉस ऑप्शन सैटरडे संडे को भी प्रीमियम लूज करता है. Option doesn't wait and it's gonna bleed on every single day. So if I say that if I hold this expiry for the next 3 more days, then what could be my possible profit and loss? So you can say there was a downshift on this expiry. You can see if the underlying remain same for the next 3 days, you're gonna lose this amount of premium. So the white line was up on the slightly shifted to the negative to the downside. So you can see here, if you are holding more and more, or the call option, you can see the white line is shifting down. So white line is what we have looking, that is a particular day, so it's a 4th day profit and loss, and on the 5th day you can see the white line approach to the orange line. So that's going to be expiry day. So you can see the profit and loss which were here almost to the here. So this profit and loss started reducing, and you can see as here it's reducing, you are losing more and more premium as you are approaching the expiry. So this is why you can see why it's so important looking at the payoff chart, and reading this payoff chart is very easy. Same way you can say for any expiry you are taking, so we have seen any expiry we are taking. Now if I say I'm adding one more leg, so let's say I'll add 11th Feb 14900 put option as well. I added this strategy, so it's a long straddle. We have taken these at the money strikes, call and put, buying it, same expiry. Now, if you make any strategy, you should be knowing that you required a huge movement. So you required a particular amount of movement. So if you are making any volatile strategy, so this is the volatile strategy where you have no idea where could the underlying will go. But you know that underlying can move in any direction, and you are also expecting volatility will also going to spike up. So this is where you make this such kind of strategies, volatile strategy. Now looking here, I want to know what could be my break-even point for the expiry. So break-even point, we have seen the level where is the no profit and no loss. Have you ever thought, if you want to make a strategy on the downside, Nifty roughly required, so around 400 point movement. Sorry, this underlying required. So Nifty is my underlying movement, required 400 point movement. So you can see here, I'm not doing any calculation. I'm just looking at this level. It's somewhere around to zoom in more. 14,005. Let's take 600. 14,600 on the downside. And Nifty, the underlying is at around 14,915. So this roughly goes to 300 points. So do you really so when you're making this strategy, you have period of till the expiry, the next expiry, and the underlying required 300 point on the downside and nearly 300 points on the upside. I had no clue while making this strategy that it required a huge movement to at least get me into the level of break to level of to have the limited amount of the profit. Now, if I say if I'm holding this strategy for next 3 days, now you can see the profit and loss which were on the here, it declined because theta is making the option premium to lose over every single day, and this particular strategy is losing more and more because you're buying both, and as an option buyer you will be losing more and more money if you are holding this strategy for longer period of time. I can see the profit which are certainly going to merge with the expiry payoff levels. Now, if I say so, and now we're going to look into the volatility. So we have seen the days to maturity, that is theta value. We have seen the delta, the change in the option premium. The underlying how the option premium can increase or decrease. So eventually, your profit and loss will increase. Now we're gonna see the IV volatility and why volatility is so important. So always remember, volatility has a direct relation with your option premium. So when we say that volatility is spiking up or volatility is going up, we can see that option premium are also increasing because option premium has a direct relationship with volatility. So volatility is, how I see volatility is in the terms of the uncertainties. So if I say if there's a lot of uncertainty, so I will say keep volatility is spiking up or something. So this is one point I see volatility, and when I say volatility is increasing, you can also check in the IV tool. You can see the IV of any stock, and you can see the movement that was in the IV. So always remember, when the IV is spiking up, option premium also trying to increase. Now, if I say, so this is my payoff the day where I'm making this strategy. I say volatility has increased by, let's say, 9 to 10%. Now you can see there was a slightly up movement. So this is my break-even point level, and this is my, so as the volatility has increased, the option premium for the call and put both. So always remember that volatility is going to impact both call and put in the same way. That's either in the positive or the negative way. So volatility is increasing, both call and put will also increase. If volatility is declining, both call and put premium will also decline. So you can see there was a slightly up movement that came uh, in the payoff. In the same way, if I say and I decline this to the negative 12, now you can see which were in the profit, now it's eventually declined. So this is how you can see. So as if you're buying an option as an option buyer, you can say that option buyer, you might be having a lot of that the chances of unlimited premium, but also look into that underlying movement is not only the only criteria of looking into the options. There are lots of other factors we have seen. Theta, days to maturity. If there is an option buyer, that if you're buying an option, theta, as you're going more to the expiry, that time value of money is going to decline, and as the time value of money decline, it will help the option seller, the writer of the option, to earn a little. So option writer is only looking to earn the premium, and the premium will decline as you are going to the expiry. That's a time value of money. Then this is the first point. Now second point comes in the volatility, which is sudden. If I say volatility spiked or cool down in a moment, you can see there's a huge profit and loss that could be resulted. So if I say the volatility, so if you are buying an option, you always want the volatility to increase. So if you are buying an option, you want option premium to increase, And how it will increase? If volatility is also if volatility is increasing, then option premium will also increase. So this is one point you can also keep in your mind. And then if you are an option seller, that's a writer, you want volatility to cool down. Why so? We have seen if volatility is going down, the option premium will also go down. So if the option premium is going down, the option writer will get benefited out of it. So this is the points you should be keeping in mind while looking whether you want to buy or whether you are selling an option, or writing an option or buying an option, looking into different aspects like days to maturity, and obviously looking at the underlying movement and the IV, which is merely as important as the other factors, because a sudden spike in the volatility could lead to a different profit and loss. It can either take the negative profit and loss to positive and positive to negative, depending on the obviously strategies as you are taking and the movement that is coming up. So this was all about the option architect tool. Still, we have left with a small part of it. So here we have the different functionality as well. So we have seen the whole core of the option architect, but more importantly, we have seen how a option buyer and option seller could analyze their strategies, looking into the different aspect rather than looking only to the theta value, looking at to the underlying change. We have seen the only to the delta value. So we have also seen the theta, time to maturity, and the volatility. So as a whether you're option buyer or seller, whether you're buying a single leg or you're making any 2 or 3 4 5 multi-leg strategy, you should be looking into how could days to maturity and IV will going to impact. So now here you can also see the different legs. Now as we have taken, you can see the option Greeks value, delta, theta, vega, gamma, and IV values for each and every leg. So this is important, but more important, looking at the whole strategy leg, which gives me a mere idea how will the profit and loss will be. You can see the delta value is only 3, but you can see the theta is almost 1900. And why so? It tells me that underlying movement, if the underlying moves, I will be earning this much. But it tells me कि boss एक दिन में इतना पैसा तो जाना है. So this is why it's very important of looking into different aspects uh, rather than just looking into the one aspect of the option. So I hope I have cleared most of the things regarding to the options. It's just basics of the call and put, and more importantly, we have seen what we can, how we can use this tool to enhance our own option trading by looking into how much days to maturity could actually affect. So sometimes I'll tell you what happens when we buy, we go with the sentiments. We look, nahi boss, मेरा stock तो ऊपर जाएगा, and on the same way we try to hold that for a longer period of time. And that is the only mistake we make, that holding a particular option could actually for as an option buyer can actually make you in the loss. An option seller, that depends on the different aspects or different factors as well. But you can see that if you are buying an option, if you're holding for a long time, that could actually lead to bleed the option premium if the underlying movement does not come in the specific time. And the IV, that's also very important. You should be keeping this particular factor as well in mind. So this was about the option architect tool, and I hope you have liked it. So if you have any particular question, you can post in the comment section. My team is looking forward, and we're gonna take the question answer session in the last. Now we'll move to the next tool, and that is the open interest. So we are taking the open interest. So now we are into the open interest section, and we have introduced a lots of new features, new view of looking into the of the things, and we have tried to implement of looking having the aerial view, or I would say the bird eye view of the open interest. So this is the new interference in the open interest, where you can see a lot of different things, not the different things, but of having a different view. So what we used to do early, we used to have to go to the chain, looking into the options, looking into the how open interest is changing. But what we have tried to do, we have taken this particular the whole tool to the next level, where we have defined the strikes and open interest, not in contract, in shares. So whatever you will see, that you will see in the shares. So for a contract, so if I say, if I'm taking Nifty, so if we all familiar with the lot size tell the number of shares it have. So Nifty have 75. So you will see whatever you see, you will see in the terms of 75. So you will see in terms of shares, not in the contracts. So I'll just take you. So if you can say 12,800 call option. So I'm taking this for the example purpose. So don't confuse with the number of shares and the contracts. So one contract, so one lot have the 75 shares. So we have taken this in the terms of shares. So this is one point you should be keeping in the mind. So now what is open interest? So open interest tells you the open positions or the open contracts which has not been settled yet. So now this is something bookish knowledge. I don't know how many people we are actually looking going to go forward with this. So I'll tell you. So we'll take a simple example. So if I say, let's say I bought a laptop and I want to sell it off within a period of 1 month. So what I did, I went and just got a laptop, and this was a person who wants to sell it. So suppose there was no buyer and seller of the laptop. So because I wanted to buy it, I couldn't buy it because there was no seller of it. Now there was a person who came. So suppose a person named A came, and he said, okay, I'm gonna sell you this laptop. So what he did, he short sell that laptop to me. He was not owning that laptop, but he gave me the laptop, and he said, I will just give the laptop after a period till this end of this month. I was like, okay, I will get this laptop at the end of some month. And that person A has said, hey, so what he did, he short sell that particular laptop. He short sell because of because as there was no seller, because of the person named A, he short sell. I had an opportunity to buy that laptop. So let's say we just made a contract that after a month or a period of time, I'm gonna buy a laptop from you at this particular prices. So now have you so if you have noticed one thing, that there was no seller, but there was a buyer. But because of there was no seller, the buyer couldn't bought it. Now there was a person he did short the laptop contract, and because of he short it, that buyer had an opportunity to get that laptop. So this is the point where the open interest came in. So open interest is now increased by a contract. So now open interest has increased by a contract. How? Because now there are parties. There's like one short seller, the writer of the option or laptop contract is in the existence, and because of it, the contract came into existence. So we all familiar with the concept of short selling. So what is short selling? Short selling is like when you don't own something, but you sell it, and you say that at the time of delivery I will get buy it. So what you're doing, you are short selling. So when an option writer is shorting an option and in front of it there's a buyer, the open interest increases. So this is the view which we take into the consideration of looking why we do look into open interest in terms of writers. And this is why when we say that there's no seller, but if there's no seller, nobody could going to buy. Now the picture of writers, that's why it comes in the short seller, the short option who shorts, because they are shorting, the option buyer can buy it. That's the reason we mostly we say that we look into the open interest in terms of writers. And I hope you have understood this. So I hope you have understood this point, why we see open interest in terms of the writers, because they are the first one who comes, which make any contract into existence. Because suppose I want to buy this laptop, but I don't have any seller, but because of the short seller of this laptop, I get an opportunity to buy. So this is one particular thing you should be keeping in mind, that how why we see open interest in terms of writers. Now, writers often a call option and a put option tells me, and they say that suppose if I'm looking at these greens, so the greens are the calls and these reds are the put. So this is the call and this is the put I'm looking into. Reason of looking and saying ki this is my immediate support, immediate resistance, this is my immediate support level, which I can see. What is resistance or support? Resistance tells me that these prices would have difficulty crossing this level. Why? Because option writers are standing here. Writers does not want, or call option writers does not want the prices to go above this level. If you are looking, if the option writer says that the prices will go above level, the option writers will gonna start losing, because they are writing a call option. That's why we say this is my immediate resistance. That's my, so you can see the multiple resistance, and this is my highest call OI at 16,000 level. So at 16,000, highest call writers are standing for the next expiry. Below that, 15,500 level, and below that you can say 15,000. So you can say immediate. So this will be changing as on the Monday as the markets are opening. So this is reason have you looking into this is the resistance level. And why I'm saying resistance, because call writers are here, shorters of the option, shorters of the call options are standing at this point, which don't want prices to go above this level. So this is the open interest. We have seen open interest. We now looking into this is greens calls, and this is my how we can identify the resistance and support here. Going below, if you say this is my highest put writers, highest put OI, highest put OI is standing at the level of 14,000. It's nearly 20, I think 20 like 85,900 shares. So at the also this is my put writers. Now if I say these are my support, so why these all levels are acting as a support level? And the reason is because here the put writers are standing, and they are telling you, if put writers, what the put writers look into, put writers want the prices to go up. But if you're buying a put, you want prices to go down. But if you're selling a put, you want prices to go up, because you want your option, the option, a put option that or the call option you are selling or writing. I mean, to when you are writing an option, you want the prices to like your option strike to remain out of the money. And that is the point why we say, why we look the open interest in terms of writers, why we look say that this is my resistance and the reds, the puts are the support. Because for the put writers, because the put writers want option prices to go up. That's why we say if the prices are gonna fall and below there's a support level. What is support level? The put writers are standing here. So this is my support level. And on the above side, I can say this is my resistance level. Why I'm saying this is my resistance? Because the call writers don't want the prices to go above because they are shorting in a call, and this is why the concept of looking into open interest in terms of writers. This is my resistance support, and this is how you can identify. And I hope I have cleared. I'm just getting clear. Now the point of looking here at this particular section, you can say we have tried bringing up the whole new aerial view. So this is my complete bird eye view. Gives me the complete picture what actually going on into the market. So say we are looking for the 11th Feb. Now if we say let's take this bar. This is something in so just keep watching this particular table which is in the upper side. So this particular table, just keep watching it. Excuse me, just for us. So this is a level of 14,800, and just keep watching this particular table. And why I'm saying so, if you notice one thing, if I go to this particular strike of 14,800, I can see that call unwinding and the put addition were being highlighted in the black section. And the reason of that, because it's telling me that at the level of 14,800 there's a call unwinding that is happening on. So even you can see the gap on this particular line, on this particular bar graph. So this is my bar level, and you can see there's a gap over here, and this is a particular thing that tells me, I'll zoom in. So this is a particular thing that tells me this was a unwinding that happened in the session, in the last session. So today is a Saturday, so I am seeing till so from 4th of Feb I'm seeing. So I can say there's an unwinding that happened, but I can see in the put side there was an addition in the put. So put writers have added more and more positions, and the call writers have added so they have taken their position away. So I can see that this particular red, which is more in the highlighted shade, so there's a call at a put addition. Now if you look into this thing, so this is the thing which, if I say, if you look into the my cursor, you can say, you can see the call, it has 6,20,400 shares, and around 1,86,000 shares has been unwinded out of which. And on the put side there was an addition of almost 5 lakh shares from the previous level. So I can say that if the today's level ending level is 13 lakh 47, so the previous will be at around 8 lakh something, 8 lakh 40,000 somewhere around. So it's telling me that at a particular level where the unwinding or the addition is going on. So green is to the calls and red is for the put. So if you can see how simple it is to looking into the different supports and the resistance level, looking into the unwinding and the additions of the calls and put. Now, if you say from this level, there's lots at this level of 14,800, 700, there was slightly 7. Excuse me. So there's a level, there's a unwinding that has happened in the call side, and the addition that were going on the put side. So it's giving me idea that nervousness among the call writers, and that's why they have reducing their positions and going forward to the upside. I hope I have cleared this particular point as well. Why we look into the option writers, sorry, open interest in terms of writers. Why we support level, how we can identify. So this is very far for the next expiry. Looking into the highest call. So this will be my the ultimate resistance for the expiry, but this is slightly on the farthest side. So I will be come and see the next level, which I say 15,500 still stand, and I say that immediately, so I can say 15,000, 15,200. This could be my immediate resistance, and from the downside, if I want to see, I can see the 14,500, 14,000. This could be my immediate support and the resistance level from where we are standing right now. So in the same way, you can see for So you can see for any stock, let's say ICICI Bank. So you can see the put and so there's lots of unwinding that is going on here on the put side, and on the call side there was an addition from the on the upper level that is going on. So this is how you can see the resistance and support level of any F&O stock indices over here. We'll go back to the Nifty. Then you have the graph. So we'll take this particular part. It's slightly at the end of this particular session of this particular tool. Then if I'm taking the symbol, I can see the expiry. So if I want to see for the monthly expiry, I can see for the Nifty, there's a the heaviness of the put writer. They are taking the more supports at the different levels. So I can say immediate 440, 14,500. Then the highest put writers at the 14,000 level. But on the upside, the call writers are that are not as compared to the put writers. So you can see the levels of put writers and the the call writers. So unwinding, we have seen unwinding means when the position are being taking off, and addition means where the new positions, the new open interests are building. So unwinding is a unwinding of the open interests that are happening, and addition is something the addition of the new open interest. So open interest is the addition of the open interest happens when the new participants, not the old. When the new short seller is coming into the market, then the open interest increase. So new short seller comes and the new buyer comes, that's going to increase the open interest. Now suppose you already have an option and you buy and you sell that option to someone else, then open interest won't get in the increase or decrease side. But if you say that you are unwinding your position, so when I say when the short seller, suppose I shorted 10 options and somebody bought it, so the open interest will increase by 10. Now what I did, I buy 3 options. So first I short sell 10, now I'm buying 3. So the open interest will decrease by 3. So now open interest will be 7. So that is why the unwinding, the open interest is decreasing, or addition means when you are adding more and more open interest on the particular levels. So this is the from date. So now we'll come to the next section of this. So this is something which we have bought in to have the particular view of the whole level at the of the different strikes. Now I'm gonna go to the second section, which is more which you can also refer. This is also the same thing, but here we have segregated. So this particular section will going to remain for the open interest, and this particular next section, the second half of the screen is going to remain for the change in open interest. So now what we are trying to look here, that this is the whole open interest at the different strike. You can see the support and the resistance level. Then on the right side, I'm looking the change in open interest. So this is giving me, so it's telling me at what level the call writers are coming, at what level put writers are coming, and how much they are increasing their position. So if I say at the level of 14,900, I can see the call addition of almost 4,20,000 shares and the put addition of almost 8 lakh, more like 8,50,000 shares. So it's giving me that put writers are more on this level, how they are increasing their position. So if I say at this level of 13,000 level, put writers are almost 9 lakh, have added 9 lakh shares yesterday. Now if I say that I want to see that from a particular period of time, so I think on the first, I want to see from 1st of Feb, from once again from 10 a.m. And why I'm doing so, because this week we had the budget. So I want to see what happened after the budget. So this is, I tell you, there was a lots of shift that was happening on the open interest side. There was a first, there's lots of unwinding happened in the call and put, and there was a build up that is going on. So that is what going on for the whole week, and the whole big week was very busy. The option traders were like changing their position drastically. But after the post the announcement of budget, put writers like have been taking the positions, and you can see the aggression from the almost the level of 15,000 to 12,000. The position that has been building up on the put side. So they are building more and more position. But if you look from the 15 to almost 16 to 17,000 level, call writers are going more on the up level. So when I say, so if you say, so how do I see into this data? So I'll tell you where something unwinding is going on. Just a moment. So yeah. So for the expiry, so this is the expiry. So this is a proper structure if I want to explain these things. So you can see the aggression of the put writers. They are adding more and more positions. And in front of the put writers, there's no call writers which are standing. So the more, so it tells me the put writers are more aggressive. They're looking, they want prices to go more and more up. So this is what put writers are doing here. But I'm looking into the change in interest, change in open interest. So particularly this is change in open interest for the expiry. That tells me that this is my expiry. Put writers standing are here, call writers are standing here. You can see there's a shift that is being happening in the writing side. You can see the call writers from this levels are reducing their positions and going upward. Put writers are reducing their position and going upward. So there's a shift that is going happening, and believe me, this is something very good to look into. When you can say there's a upward shift that is happening in the OI band, you can see the writers are shifting upward side, and this is good thing in when it happens in the OI band, that the writers are shifting upward side. So this is how you can look into this data, how this is, you can analyze the open interest. You can see the market participants, what they are doing, what they are looking into the particular script. Maybe it could be a index or a stock. You can actually see and analyze the different perspective of the writers for the on the open interest side. Now you can also see the table view. Oh, excuse me. So table view is also the same thing. The table view, you can see open interest at different strikes, what is the call and the put, and the change, what is happening on. One second. So this is the point. This is very interesting point. Change in open interest. So change in open interest. So suppose on the day, or suppose on the Monday, I want to see at 12 or any time, particular time, I want to see how the structure, how the open interest, the structure of open interest has changed from a particular period of time. Why this is so important and comes handy looking into the market, current market situation. I tell you, on the day of a budget, what happened after the budget? There's lots of upshift that has been seen in the market and the open interest front, and put writers are adding positions, call writers are unwinding their position and shifting to the next level. So it gives me what happened after the budget, how the open interest have shifted after the budget. So suppose if budget ended at, I don't know, I think 12 or 1 or somewhere to 12 or 1, how the market was shifting and taking place, I can actually analyze through here. So this is what it comes very handy, looking at the different to the complete picture of the whole writers, of the call writers and the put writers. So this was about the open, from the open interest fund. You are getting a clear picture and the more interesting part. So one thing which I said I'll take in the last of this particular tool. So this I say is the chart. So interestingly, we have tried putting chart on the every single after the name of the symbol. Why? Suppose I want to see the chart of the Nifty. So in the Quantsapp, so we are totally into the derivative side. We are not into the cash segment at all. So I want to so whatever you want to see on the Quantsapp in will be in the terms of the futures and the options, and purely futures and options. So this is the chart where I can easily jump from a particular tool to charts. So this is the chart. So I can select the rolling future, so the next three future which is active right now. So this is how I can see. Sorry. So we're gonna back to our. So that was just a chart where you can actually shift from particular tool to the chart, and you can see the chart section. So I hope you have understood this particular session, this particular tool as well. So now we're going to move to the third part, that's trigger, and that is my personal favorite tool, and this is the triggers. And believe me, this is a tool which gives a lots and lots of insights about the options. And the reason of today's webinar, taking the triggers into this webinar, is just to so we can have the clear more insight of the open interest. And if I say want to see breakout that is happening or breakdown that is supposed to have, it could be, it might have in the prospective day. I'm not saying it's going to have, but I can see and analyze that actually I can identify the stocks which could have the likely movement in that them. So the reason of it, taken triggers with the open interest, so I can have the more insights about the open interest, as we have seen the lots of things. So if I say so this is what my first part of open interest. Now I'm seeing the option triggers. So option trigger tells me that which are those stocks which could have a likely movement in it. So this is very simple tool, but very useful. Believe me, this is one of the useful tool which I do use a lot of time when I have to see the particular stocks. So one second. So suppose so I'm gonna take a simple example to explain this particular thing. So when I say that stock is trading at like suppose at the level of 998, this is very near to the 1000 level, and the highest call OI, highest call open interest is standing at the level of 1000. So stock is nearly trading to the level of highest call. Now say I want to analyze and see how the market participants, so the call writers are doing at that particular time. So as we have seen in the open interest tool, that when there's a lots of addition, once again. So when I say that lots and lots of call addition is going on, so call addition is going on, so that says that call writers want the prices to go down, and I'm looking open interest in terms of writers. So when I say that the level of 1000, there was a like huge increase in the call, it gives me an idea that the call writers want the price, that they believe that prices won't cross this level, or even that cross, it will going to be in the not in a big quantum. In the same way, so if I say that stock is at trading at 998 and the future price at 1000, sorry, the highest call OI is 1000 at 1000. So it's telling me, and at that particular point, the call unwinding is happening. And suppose at that level, 50%, 70%, 100%, no, whatsoever the percentage of the, sorry, excuse me, 1 second. So if I say there's lots of and lots of unwinding and the call side is happening, that is showing the nervousness among the call writers at that particular point. They might be believing, they might be have the belief that the prices might go up. So always look how the option participants are doing, whether they are increasing or decreasing positions, or whether they are shifting upward or downward, which gives us a good idea. So we're gonna search those stocks. So if I say call difference, so if you then lots of data over here. So we have tried putting things more into the color sides. So if I say call difference is in a percentage of 10%. So say if I say any difference in the terms of white color, so even you can say here. So what is white color tells me, the call and the put difference, that at present whatever the highest call and the put of that particular strike is very far. So if I say, so what is the call difference? First, we're gonna see that the difference of your highest call from the future price. So you can say the Fin Nifty future is trading 16,700 level. Highest call is the level of 15,000. So highest call is below the your below the future price, and that is approx 10.5. So I'm gonna see take another one. 1 second. So let's say Wipro. So Wipro right now is trading at 428, and the highest call is at 500 level. So that's a very far level. It tells me that the highest call, that the difference between the highest call and the Wipro is almost 16%. So highest call is almost 17% far away from the future price of that particular symbol. So this is what. So if you see any difference of more than 5% in terms of -5% and +5% for the both call and put, that means that has been indicated in the white, you can see here. Then if you say any difference more than 2% but less than 5%, that has been indicated in the yellow. And if you say any difference which is greater than 0%, okay, so it could be from 0% to +2 or 0% to -2, that has been indicated in green. So green says that the highest call or the highest put is very near to the future price of that particular symbol. Yellow says that the highest call or the highest put is slightly more than 2%, and it till 5%. So it has been indicated in the yellow. So it could be that the stock could come into the green. So if you can relate, and if you say any stock which is in the white, that means stock is right now the highest call is much on the very far side, or the highest put is much on the far side from the future price. So this is how you can see where's the highest call, where's the highest put, and the difference. Now I'm gonna take you, so you can see Adani, PNB, Godrej Properties or Adani Ports. Now this is very interesting. Bank Nifty is also there. Adani Ports. So this is one symbol, Adani Port, which is trading at 569.8. The future price is 569.8, and you can see the highest call strike is at 570 level. Almost same, just a 20 paisa difference. It's almost same. This is almost the future price is almost on the level of 570 strike. Now I want to see what the call writers are doing here, because Future is trading at the highest call. Now I want to see whether the call writers are getting jittery or whether they are showing confidence at this level. So when I say at this particular level, the call writers are adding more positions, they are showing more confidence at this level, which tells me that they are confident that price won't go above. Even they go, it could not go in a big quantum. So that's why the writers are getting more confidence and they are adding more positions on this level. So you can see at the level of 570, change in OI, that change in OI is increased by 40, almost 43.5%. Now, if I say looks into the Godrej property. So Godrej property right now is at 1398, almost at the level of 1400. And this level, highest strike or highest call OI is also 1400. Now you can see that for the Godrej property at the level of 1400, call writers are showing nervousness. This is the point of looking that call writers are getting. They have some sort of fear among them that the future price might go up. The future price might cross the level of 1400 and might go in a good way. So that's why the call writers are showing nervousness. They are unwinding their position. There's a decline in OI that is happening here. But for the Adani ports, call writers are adding their positions. They are adding more and more position. So this is how you can see from the perspective on the call side. Now, one point I want to bring, which I saw here, that's a PNB. If you notice, PNB is written in the red. So if you see any stock which is written in the red, that means that particular stock in the ban period. So you can also identify those stocks from here. That if something is there, if written here, that is in the red. Any stock has written in the particular, that is in the this side. So you can see that for the Godrej or Adani ports, how we are looking. So we are not saying that they will be a huge movement, and so what we are trying to see here, how the option writers are looking here, how the option, whether they are building their position, where they are unwinding their positions. So this is how you can see for the Godrej or for any FNO stocks. Now we're gonna see and look from the put perspective. So if I say if we have arranged it, so I can sort it the data from here. I'm gonna see. You can say sale is in the ban list. So this is how you can also identify the stocks. Then Dabur is trading at so we have Dabur, Asian Paints, Dabur. So you can, let's take Dabur. Dabur is at 524, highest put is at 520, almost different of 1%. You can see at this level, put writers are adding more and more positions, showing confidence at this level. So they are providing more support here. And if this breaks, so you can, if this goes, there might be something more immediate support levels might be. But they are showing more confidence here. This is that they are confident, and that's why they are adding more positions. So this is where you can see which are the stocks are very trading near to the highest call and put. How the writers are doing and gives us, I believe this gives a much of the significance of the lots of things. So this was about this particular thing, that you can analyze the writer's perspective, how they are adding or the position, whether they are adding or declining the positions. You can also search for a particular symbol, let's say ITC. So this is how you can particularly search for a symbol and you can see of it. So I hope we have covered almost every section that we have taken today, and I hope you have enjoyed this session. So we're gonna take the question answer. Obviously, we're gonna see the question answer session about the tools, about the things we have taken today, we have seen today. But I hope you have might have learned how you can use these tools in a more effective way, how powerful these tools are. Whether it could be by making your custom strategies to making taking in looking into the open interest. That is a wonderful tool than other than looking into the option triggers, which gives a lots of significant insights how the option writers are doing. So one thing I just forget to take here, just gonna take again. So we were looking into the Dabur. So no, we'll take different stock. Adani Ports we were looking. So Adani Entertainment, PNB, Dabur, call writers are, look the heaviness of the call writers in the Dabur. So you're gonna see Adani Ports only. So from here, so if you click on this symbol name, you can actually go to the open option chain, open interest, and option gate. So you're gonna go to the open interest. At the open interest, now open interest, going to the open interest, here I'm gonna see that so particularly I can see how the writers are doing, how the put writers and call writers are doing. So this is a simple part I just wanted to bring, that how we can go from particular tool to the other tool. So now we have done with this today's webinar. I hope you have learned us some things about the options or looking into the different perspective of holding an option in the architect, then looking into the open interest, how the market participants are doing, then looking specifically particularly on a stock, how the option writers are doing. So we're gonna start our question answer session. So if you have any questions, so please you can put on the chat box and the team will take care of your questions. So so there are some questions I'm taking. Just give me a moment. Uh, so the first question we have, we're gonna jump to the option architect tool. So somebody has asked, can you please explain if someone buy 15,000 P? So we have Nifty over here. I'm gonna literally see here. 15,000 put option, 25th expiry, 2 lot. So I'm just making your own this, and sold 15,000 PE. Okay. So what you're doing, you're selling the 15,000 PE. You're buying 15,000 PE for the expiry and 15,000 PE and sold 2 PE expiry 2 lot and sold 15. Okay, so you're selling this in the near expiry. So you can see the payoff graph of yours. So if someone buys 15,000 PE for the 25th expiry 2 lots, so we bought, 1 second, sorry, my bad, I'm gonna take it 15,000. So buying 15,000 PE 2 lots and sold 15,000 PE. So we sold 15,000 PE of the near expiry. So this is how your payoff going to be. You can see your break even point is coming on the level of so you can see how easy it is to look into the break even point. 1 second. Which is nearly to the level of 15,120. So if it falls below 15, goes above, sorry, if it goes above 15,120, it's going to start harming you. And if it's going down, you're gonna see. Then let's take the whole. So then So one has asked, what is the use of option buyer? What is used for option buyer? So as we have seen, that why option, like aspects of the option buying. So when you're buying it, you should be careful from the theta decay, you should be careful from the decline in IV, you should be caring that that looking into how the others factors, like these three factors can actually affect. So in option buying, having the upside of the unlimited profit, but also come with the loss of the whole premiums, and that is why, and there's lots of factors you should be looking. So 1 second. The next question: if unwinding of call is happening, market structure is becoming weak and market is going to fall. That can't really say if unwinding of the call is going on. So when call, so I'm looking in the terms of writers. If unwinding is happening, and they are looking more on the side that they are slowly, they are not confident enough that the prices, they are like just showing nervousness that the prices might go up. So that one thing. So unwinding, if there's an unwinding going on in the call side, that shows the nervousness among the call writers. Thanks a lot. Okay, so my query on change in OI data. Okay, it must be showing from 1 day prior and till live data in system. Yes, Mister. So it shows from the last. mm, so if you have seen in the open interest, you can see it showing the data of the last day. So it's 4th of Feb 4:45. What the data was. So if the today was the trading day, you might be seeing the data from the yesterday's. So please tell us how to and where to initiate trade with the help of Quantsapp or particular of tools in the different scenarios in market. Okay, so there's lots of tool you can look into. So one of the option trigger we see, then there's a trap indicator. So that's a Concept proprietary tool, and that's one of a very awesome tool because is actually trapping, is catching the trapping the open and trap the position of the writers, which is particularly also I look most of the time. So that's a one thing you can do, looking at the trap indicator. Then change, understanding how the open interest OI band is, open interest band is changing. That's give the lots of significance. Then there are lots of tool you can actually look into. So this is the three only I have told you. So I'll tell you that. Then built up, you can see how the built up is going on. Mm. So these are the tools. Then pair trading, if you are interested in pair trading, you can also look into the pair trading tool, where you can see a lot of things, how you can make pairs, how what are the relations and all. But in the case of Dabar, call writing is 300%, put writing is very less. Okay, so it tells me, so we saw Dabar at 524 and the highest call and put were at the same time, at the same level. It shows me that call writers are more heavy in terms of put writers. They are increasing more and more and more position as compared to the put writers. So it could be any different scenarios. Market participant, so see there's lots and lots of market participant. We can't go and ask them, all of them, give what why we are doing so. So looking at the data tells me this only, that's how the call writers are getting more and more heavy as compared to the put writers. Thank you, Mr. Dilip, for such amazing analytical tools. So thank you so much. Yes, Mr. Dabur call writers are more aggressive, 300% increase in OI. How to find breakout from OI. So you can see in the triggers how the writers are doing. If there's like lots of call writing is like additions are going on, so you can say that like the writers are not looking to prices to go up, or like, so how you can analyze the open interest. That is what I can say. So there's lots of factors. You can see how the OI band is shifting, the whether it's going up or going down, whether the writers are getting more aggressive or they are just calming themselves down as the prices are increasing or decreasing. So these are the factors which you should be looking. Option architect, how to save strategies to. So we are also working on this, and surely soon we will have the option of saving these strategies. How much open interest need on a particular strike to buy, call, or put for a retailer? So that will be very even I can't say that, but it should be enough that you can buy a particular call or put. So if I say that you are easily able to buy something, that is for a retailer, that is more than enough. So these were the tools we have taken today, and I think we have this much questions only. So there's one question. So this, not all the tools are not free. There are some. So there are we have in total around 48 tools, and in out of 48, 30 are in the free, and 17 is in the premium, and around one is the premium algorithm. So I'll just roughly show you. So for any further detail, you can also contact us on the support at the rate concept.com. So my team, my technical team will just put the email address along with the number, which you can call on the support team if you further want assistance of the on the tools, or you can connect us. So I think we are done with the question answer session as well. And for any further query, as I said, you can reach us on the support at concept.com, and you can put your valuable feedback on the comment section. We will be very happy to look into. And you can also suggest where the points where we can grow up. So that's all. I hope you have learned something new about the concept tool. You can see how you can use these tools, and I hope that the days we had this week will continue in the near future as well. So that's all. It's time to sign off, and for further assistance, you can reach us out.